when the interest rates go down, whether it's this year, next year, they'll be able to, you don't have to do a refinance. It's automatically going to drop down to that lower rate. This is the purpose. This is the real purpose for credit unions that really sets them apart from traditional. Do you know the new 2024 requirements for a VA loan? Let's talk about it. In this video, we're going to break down all of the updated qualifications that you need to know in order to take advantage of your VA loan. First off, for those who don't know, a VA loan is essentially a Veterans Administration loan, and that is essentially where you can get it from most of the mortgage lenders out here today. Long story short, it is a loan in which you have to put down $0 in order to go into home ownership. Okay, typically for a first-time home buyer, or really a home buyer in general, if they are going FHA, they have to put down 3.5% of the purchase price. If they are looking to go with a conventional loan, they can either qualify for 3% down, or 5%, 10%, 15, or 20% down. With this particular VA loan, you do not have to put down any money, but there are some things that you should know. Number one, the minimum credit score that you need to qualify for a VA loan in 2024 is a 580 FICO middle mortgage score. A lot of times people just say 580 score and they're done with the conversation. No, in order for you to see this score, there's only two ways to see this score. One is to go to a mortgage lender. A mortgage lender is going to run your credit and they'll see exactly what your mortgage scores are. They're going to get it from TransUnion, Equifax, and Experian. And for those who don't know, FICO actually has a category for each score. In this case, it will be the mortgage category. And when they look at that category, they'll be able to see what those scores are. So what they do is they drop the highest score, they drop the lowest score, and then whatever score is left over is what they call your middle score. As long as that score is 580 or above, you will meet the score qualifications. Next is going to be your DTI requirements. Now, every lender is a little bit different on what those DTI requirements are going to be. And that's just to make sure that you can actually afford the loan. Okay. So that's number one, is going to be the credit score. Number two is that you have to understand that zero down does not mean $0 to purchase a home. Okay. That's two different things. Zero down just means that there's a $0 down payment, okay, that they're expecting for you to have, but you still have to cover your closing costs, which is going to include your attorney's fees. And with the recent commission changes, you may have an agreement to pay your buyer's agent. So there's a lot of different things that you need to have in place, to understand that. And of course, your lender will let you know what those closing costs are going to be. Now, that does not mean that you cannot get closing cost assistance. You can get that from the seller. Most of the VA programs will not allow buyers to use their VA as well as get down payment assistance. Now, every state is a little bit different, just depending on how they're able to structure the loan. But in most cases, you cannot get most down payment assistance programs unless it comes from a different source, along with the VA loan. So what a lot of buyers end up doing, they end up just asking the seller for closing cost assistance. Okay, so that's always one way that you can do that as well. And then in some cases, you can also get a gift as well too, which means that you're getting gift funds from a family member or a friend, as long as it meets the qualifications. Also, to add on to that, that also does not include your earnest money. So your earnest money is typically 1% of the purchase price. So for example, if you're under contract for $300,000, it is expected that you give at least $3,000 of earnest money, unless you all agree to a different number. Number three is going to be that you can actually use your VA loan up to 4 units. Okay, so that means if you're looking to purchase a rental property, also known as a multi-family property, that's 2 units, 3 units, and a 4 unit, then you can actually use that same loan, $0 down, and then end up buying that property. But again, you still have to come up with your closing costs as well as your inspection fees. You still have to come up with your closing costs as well as your earnest money as well. Number four is going to be the purchasing limit. Now, there used to be a purchasing limit for years. They have most definitely raised that limit. I think they've raised it up to either 1 million or no limit at all, but there used to be a limit onto how much property that you can actually purchase. So again, sometimes these rules change just based on what the economy is doing and based on what people are actually doing as buyers. So I'm sure some answers are going to be inside the comments as well too. But make sure that you actually talk to a lender to find out what you're going to qualify for, because at the end of the day, whether there's a purchase limit or not, or a set amount, everyone's income is going to be a little bit different. So what really is not about how much you can go up to, It's really going to come down to how much can you afford if it's your mortgage in general. Okay, especially if you're looking to consider or compare between a single family home and a multi-family home. Number five, you need to know what options you have. Now, you technically can go to most of any mortgage companies. All of them have a VA loan, but you got to ask yourself, what else am I getting outside of just customer service and someone that's giving me the same type of loan that I can pretty much get anywhere else? Let me show you. So the thing about a VA loan is, number one, you obviously have to qualify for a VA loan, and that's typically with having an honorable discharge, from the armed forces. Okay, so we're talking Air Force, Space Force, Army, Navy, you name it. Again, if you've served in the military, you most definitely want to talk to one of the people that's involved with relations and such, and you want to make sure that you actually meet the qualifications to go and actually use some of your benefits, which is, of course, your VA loan. So the chances are high that you're already having banking with a lot of these Army type banks, these military type banks, which is like a Navy Federal, a Penn. Some people think Penn Fed is like that. You don't have to be in the military to join Penn Fed, but like a USAA or a Navy Federal, for example. Okay, there's a few more that's out there as well too, but those are the most popular. The reason why you want to consider working with, like say, Navy Federal, for example, is because not only, of course, you can get the pre-approval anytime, but the biggest thing is that you have the special freedom lock, okay, which means your rate is going to be protected. So if you start the home buying process and your rate ends up going down and then it goes back up, what they're going to try to do is lock in the best interest rate during that time frame as well. And they say that they have loan options with no down payment. Again, that's where, again, it's going to be $0 down out of your pocket, but you still have to cover the closing costs. But then sometimes too, there are different types of programs where they can assist a little bit more than that as well. Then they have the rate match guarantee, which means that there's someone that is offering if there is a certain type of rate that's being offered by a certain type of party, then depending on what your state that you're in, you can always go to this Navy Federal, learn more about it as well too, just to find out, because they're going to break down to you what states actually participate in and what the qualifications need to be in order to take advantage of that. But what I really like about it is there are no refi rate drop, which means you can buy now and you can get a lower interest rate later. So what this means is exactly what's going on right now. The rates are not as good as they can be based on what we've seen in the last 4 years. Okay, back in 2020, 2021, we saw interest rates get as low as the high twos, low threes for many of the mortgage companies out there. Okay, saying that to say, when the interest rates go down, whether it's this year, next year, they'll be able to, you don't have to do a refinance. It's automatically going to drop down to that lower rate. This is the purpose. This is the real purpose for credit unions that really sets them apart from traditional banks, because as we know, banks, of course, they make the most money based on the highest interest rate that is available. And once you're locked in, obviously they're making more money off of that loan than what they would be when the interest rates actually come down. So what they're saying is, hey, you don't even have to qualify for a refinance, because a lot of people, if you're not going through Navy Federal, for example, then you would have to qualify, for the new interest rates when they do come out, and then decide if the money actually makes sense. But if you're going through, let's say, Navy Federal, for example, you do not have to put together anything where you have to go ahead and refinance. So keep those things in mind as you are going through your home buying journey, and as you, of course, are talking to your buyer's agent as well. All right. So if you like this video, you're most definitely going to love the next one, and I'll see you there.